Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about VENKYS India, one of the shares for which there was a lot of demand for a video. So here we are with the VENKYS India report card. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. So now about VENKYS India, it is a part of the VH group, which are into different segments of the businesses. One of their segment is into the FMCG business, and their company is VENKYS India. It produces poultry products, mainly eggs and other poultry products, etc, and the stock went up appreciably during 2015 to 17, and their earnings also went up tremendously, probably 2-3 folds their earnings went up by, and so the stock also surged during that period because the small cap index was surging, and it is one of the small cap consumer stocks that we are talking about here. It had major correction over the last 18 to 20 months, as had a lot of small and mid cap shares which have fallen big time. But what we need to understand here is whether we should invest in this stock or not at these levels, because the stock surged to something like 400,000 or even more than that, and now right now it is quoting around 1700 rupees. So the growth was appreciable in the company's sales as well as profitability over a 3-year period of FY15 till FY18. And over this presentation, I'll let you know why did that happen and what lies ahead. So to look at the numbers, at the moment, market cap currently is at 2500 crores. So not a very large cap. In fact, a small cap company, not even mid cap. It has a solid EPS right now, and it still is quoting at only 14 times earnings. So it's not quoting at 40-50 times or more as with other consumer companies. So that is a positive for VENKYS. Stock has corrected over 70% from the peak, and the peak was around 4600 in 2018 or late 2017. It went to something like 4600 or even more than that. Right now it is quoting at 1740, 1750 rupees. At its low, it had corrected at around in 75%. The low made was around 1100 rupees. High expenses really hurt the company in terms of margins and profitability in FY19, and these expenses came into being from raw material cost as well as oil cost because of the higher oil prices. So what are the other reasons for fall that I have put up here? These are the major reasons for the stock fall that had taken place from 4600. So high raw material cost, as I said, which includes the cost for rearing, you would say, hens, etc., for rearing of eggs, and the cost went up because their products which they eat, which hens and other poultry animals eat, that cost had gone up, so their expenses had gone up. Egg prices had reduced, so this was the major reason for the surge, because more or less VENKYS is like a commodity play. When oil prices go up, ONGC go up, and so on. So sugar prices go up, Balrampur chini and Dhampur sugar go up, and so on and so forth. Here egg prices were the key. Egg prices went up to even at 6.5, 7 rupees per egg. Right now it is quoting at 4.5 rupees per egg. So the slashed egg prices, slashed inflation, has led to lower earnings for the company, and it has stabilized. The prices of egg has stabilized, so the earnings have not been that great even in the June quarter. The valuations were very rich. in 2017. As with all the small caps, this was quoting at something like 52 times, or although its average or mean valuation was around 20 times. And that's why the correction, so quoting at 50 times, was extremely expensive for Venkys. Although at that point of time people felt that as it is more an FMCG play, more a consumer play, so 40 50 times is fine for Venkys. But they did not take into consideration whether the earnings would be of the same quality as it had been over the last 2 3 years. So the earnings had a miss a couple of quarters, and the stock fell from 4600 all the way to 1100 over 18 20 months. It is a mainly a pure egg and poultry play. So if the egg prices go up again and it is in demand, or if the economy really becomes robust and people who are of the lower end of the economy, who are in the lower end of the economy, starts earning more, they would be having more eggs and poultry products rather than having pulses. It is quite obvious. And if one can put that logic to force, then maybe over the next 8 10 12 years, this stock would do really well after 8 to 10 years. But in the shorter span, say in the next 2 3 4 years, I don't see the stock performing extremely well, although the valuations have really corrected over the last 1.5 years. So, what is the current status of the company? The margins and profitability may have peaked out. That's what I feel. So, uh, we have seen the margins, like the net profit margin on the northern side of 20%. We have seen the gross profit margin of 25 27%, and ROE of 33% during that 2015 to 2017 phase. But everything has a limit, and probably those numbers have peaked out. So they would produce profits, and the profits would be in the range of 15 to 20%, but nothing like what took place between 2014 to 2018. It was oversold at around 1600 1800 level. Right now the value is around there. It was extremely oversold around 1100 levels. Probably I believe that its correct valuation is around 18 20 times. So we could see around 2800 to 3000 levels coming in the next 1 year. We could see correction as well, but my analysis say that we could see a surge of 70 80% from these levels. But again, you need to understand that it is a very volatile stock, and it is more or less a commodity type stock where egg prices really matter and poultry prices matter, and their raw material cost should go down in order for the company to make higher profits and the stock to go up. So it is not a very good long term play like 5 years 7 years into the future, but it is a nice play on, or a nice strategic buy at the moment, with a nice stop loss around 15% lower. Say you put a stop loss of 250 rupees lower from here, 1500 rupees as a stop loss, and trade it higher to around 2800 rupees, like that. So what is the strategy? As I just mentioned, you can buy on decline. So it comes to around 1600 to 1700 levels, or any decline in the market, you can buy with a solid stop loss of 15 20% lower, and you can cater it as a trading play rather than an investment play. And as I said, it could easily go to 2500 to 2800. So take that as your target. Keep looking at results. It should not be very bad. If they have abysmal results, just get out of the stock, and don't have large exposure or long term exposure in the stock. You could see 50 60% upside, but it is a risky play because it is extremely volatile in nature. The stock is very volatile. It could go up 20% one day, go down 20% the other day, you would not know the reason. So put only 5% of your trading amount and trade in this, 5% of your investing amount, and trade in this stock rather than invest for a longer period of time. So this was my video on Venkys India. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away. I would be having a live stream sooner. I'll let you know with other post as well. Thanks a lot for watching.